Welcome back to the New Equity Network show. I'm Michael Yorba, your host, and Ed Baxter, co-host on the show. We're talking about capital formation, the different types of capital formation that's out there, but not just from a issuer point of view, or but the entrepreneur seeking capital formation, but also what to look for from an investor point of view, where to look for these opportunities in these companies, and how to make sure that you're getting in with the right company. And one of the things that we're going to talk about with Ed and I right now is strategies and the variety of strategies that are out there, so you can get a better idea. Because this whole business of investing in small cap or private companies is really something that you've got to have some background in. You got to have some place to start. Otherwise, you're just kind of shooting the dice at it. And I'd rather be able to have a show that brings new, innovative ideas to the world, but not just that, but also background on those ideas, so the education can come from the investor and the entrepreneur side. So Ed, you wanted to start talking about strategies and being able to see those strategies that are going to be successful. They're going to have some scalability to them in a variety of sectors, whether it's an investment bank or on the other side, a private equity company coming up with an idea to put it out on a crowdfunding platform. And by the way, we are going to be bringing crowdfunding platforms on the show so they can talk about the variety of strategies they bring up. But let's start with you, Ed. But let's talk about some of the strategies that you see that are out there, that are successful, that are starting to work.
I think just like any money campaign, when you have a new company or a new idea and you're looking to figure out ways to try to finance that company, the things that stand out are how systemic is the process by which you attempt to raise the capital for that particular company. And too often we have kind of a hit or miss, or a couple of relatives here or friends and family there, and sooner or later you run out of them unless you have a really big family. Ultimately, you want to be in a position where you have a chance to speak to and be in front of people who are willing, able, and understand the process of investing in small companies and understand the risk associated with it.
Okay. Now, let's get into the strategies, because that's kind of a broad spectrum. I mean, you really hit the canvas with a big paintbrush. But let's talk about some of the strategies you're seeing out there, the scalability that needs to come to the table so that they can actually have success.
To kind of give an idea of where the world is going as far as the crowd is concerned, because obviously we all know what a crowd looks like. It's just a lot of people.
Yeah, it starts with one, right?
It starts with one. All we need is one, and that's where the crowd starts. That said, if you think about maybe a company like Crowdcube, which is a crowdfunding site essentially based out of the UK, the leader there says that he wants his crowdfunding site to be like Google. In other words, it becomes embedded in people's minds when it comes to looking for opportunities. And I think that as we go forward in the marketplace, ultimately crowdfunding platforms will fall in that category where they'll be almost like search engines for opportunity. And I think that's something that sets them apart from other existing platforms prior to that.
All right, now let's not just stop right there, because we've got a variety of partners that are out there. As a matter of fact, I remember last week you were showing me a crowdfunding site and I could see this is going to be very specialized. You showed me one where they only do oil deals. I mean, they actually chose a niche. And tell us about what's going on with this kind of a crowdfunding platform. What kind of deals you think you're going to see on these platforms?
I think the more specialized the crowdfunding platform is, the more precise you have as far as your marketing, your particular campaign is concerned. And it becomes kind of a holistic approach where not only you have the crowdfund platform where your documents there, you load up all your information, you also need to be able to publicize that idea through mediums like we have here, where we'll spend time talking to companies who are interested in promoting their particular capital campaign without necessarily making a solicitation to the public. We'll be doing that. In addition to that, we want to be able to guide them and guide entrepreneurs and listeners in understanding that you can't take a scattershot approach to this. It becomes, as my grandfather would say, a rifle versus a shotgun. You want to be very precise in how you do this because it increases your opportunities for success.
All right, so I'm getting the feeling that what we're going to be able to do is bring people who are in incubator and accelerator programs into the show, talk to them about their ideas, and then make introductions to the variety of crowdfunding platforms that are out there. Also, the other types of capital formation that are out there. I mean, we've got a partner, and he's got a crowdfunding platform called Corporate Crowdfund. What kind of deals can we expect to see off of that one?
Mostly general deals at this point. I think that corporate crowdfund will be a great place for people to upload all their information. It also gives you, the investing public and the entrepreneur, an opportunity to have a one-stop shop for all the things you need to see about a particular company. That gives you a chance to do it in a very precise and concise way.
What kind of deals are coming over the bow that you've seen now? I mean, the ones that you can talk about that you think we should bring to the public.
I think energy is obviously big right now with oil prices trending up. I think it was Goldman a few weeks ago indicated that we're probably going in the 20s. Right now, Brent's around $67, which obviously makes them really smart. Most people who are in the oil patch understand that this is cyclical, and most of us who've been there for a while understand that the prices go up and down, and that's just part of the game. On the biotech side, there are specific crowdfunding sites that are designed to advance science. What we've seen over the last several years or so is we've seen a reduction in research grants for advanced science for biotech and research, and that's kind of a challenge in a certain self itself. Also, on the high technology side, we see a ton of VC money going into deals that may or may not be good, that may or may not be valid, but I also see a lot of deals out there that may have validity that aren't getting any funded at all. So we see those moving toward the crowd, in addition to keeping more control of your company via the crowd versus the VC or private equity route.
Yeah, well, that's what really gets me, is because do you really want outside investors if you can gather customers? That's another decision that everybody has to make.
This is true. I think that from a historical standpoint, we see that the professional investor, in most cases, is going to take the lion's share of the company if they're the investor in the company. The crowd investor wants a position in the company, but doesn't necessarily want control of the company. So it democratizes the process and gives entrepreneurs a little bit more maneuverability to be in a position where they have a chance to do great things with their own company.
All right. Well, one of the things that I was really worried about, or not really worried, but had a concern is, it's almost like the Wild West out there. You've had a resurgence of the market. It's been going. Some of the experts that I've talked to said, this bull market could last until 2020. And well, when you get to the latter part of any bull market trend, people start to become more friendly towards higher speculative investments, which in the security side lends itself to private equity investments or these smaller cap investments that are made. They've already stuck with the legacy investments of John Deere, MetLife, things like that. And that can get you in a lot of trouble because you can actually put your money into the wrong spot. How would investors know, and people that aren't seasoned investors, how would they know that they've got a process to go through to make sure that they're following the right steps to invest in these higher rate of return, but also higher risk companies? What are some of the things people should start to see that they're going to get from the show so that they can stay on the right path and actually get a return on their money?
Well, now you have me going back to put my institutional trader hat on. The one thing that stands out as far as the marketplace is concerned in equity is that the market itself, publicly traded securities, that is, by de facto have risk because there are entities out there that can change the dynamics of a company's stock movement in a day, in an hour, in minutes, and that's something we have to be able to avoid. No matter what the marketplace has, private equity, venture capitalists will always be investors. They may have less funds to invest, but always be investors in innovation because that's where the next round of good companies comes from. So the way you can take beta, or as we call it, a risk out of your portfolio, is to take some of your portfolio out of the public markets.
Okay. All right. So tell us how that happens.
Well, most people will allocate a certain portion of their portfolio for the purpose of private investing. There's always a room for the investment you need for liquidity, and there's always room for what I call the Clydesdales, those big, strong companies that no matter what, typically will continue to go up or down or sideways. You don't have an idea of exactly where they're going sometimes, but you do know that they're not necessarily going out of business. But you do need that risk capital there for your hurdle rate. The biggest thing we face on investors going forward is whether or not the Federal Reserve Board and the European Central Bank will continue to be accommodative with really cheap money. I'm a firm believer in this particular bull market's been driven by the fact that risk equity has been pushed toward the investors in the sense that you can make no money on fixed income investments for the most part. Government bonds, the yield's low, CDs, it's low. And a lot of the other investments, the yield is very low. So we have to protect investors from that by giving them an opportunity to invest in equity.
All right. So, Ed, you're going to start bringing us some of these companies. We're going to put them on the show. We're going to talk about the strategies and make sure that we've got the right content for the right people. All right. I want to thank everybody for tuning in to our first day. This is kind of like our shakedown cruise. Again, if you've got innovative ideas and you want to bring them out to the market, contact us at NENS, newequityshow.biz. All right, Ed Baxter and Michael Yorba, thanks for being with us. We'll talk to you soon.